Today's podcast is brought to you by Jerry Robinson's PACE Portfolio. Learn how to shield your investments from economic uncertainty with this complete do-it-yourself portfolio package. Learn more at paceportfolio.com. That's PACE portfolio.com.
Friends, welcome to the Tuesday edition of Follow the Money Daily, a daily podcast dedicated to your personal, spiritual, and financial liberty, found right here every single weekday on Follow the Money Daily. That's ftmdaily.com, right there online, where you can find all of our shows archived. My name is Jerry Robinson. I'm an economist, best-selling author of the book Bankruptcy of Our Nation. And as always, I'm joined by my lovely wife, co-host, and national director of our Christian Financial Advisor Network, Jennifer Robinson. Jennifer, great to have you this morning.
Thanks, Jerry. Well, we kind of have a real estate theme going on for the first half of the week here. Yesterday, we talked about why America is becoming a renter nation and why those sort of conditions are kind of ideal for a real estate investor.
They really are.
Yeah, exactly. And then today we have a wonderful interview with real estate investor of largest proportions, Kim Kiyosaki. She's going to be on the show, and it's actually a recorded interview that we did maybe a year or two back, but it's so relevant to what we're talking about this week about real estate.
Yeah, we decided to reach into the archives and look for some of the good real estate interviews that we've done over the years. And Kim Kiyosaki, who is the wife of Robert Kiyosaki, no doubt you've heard of him. He is the author of the, probably the best selling finance book of all time, Rich Dad, Poor Dad. And he, of course, has been on the program. He's a friend of the show. You can search his name and find interviews with him on ftmdaily.com. But Kim Kiyosaki, his wife, really gave a lot of great insight in this interview. So we thought we would pull it out of the archive and bring it to you and let you enjoy some of the things that she had to say. So without further ado, I guess we'll head right into that interview right now. Hold tight. All right, well, my next guest is a highly successful real estate investor, an entrepreneur, and a best-selling author. Her first book, Rich Woman, was a Business Week bestseller and is one of the top 50 best-selling personal finance books of all time. Her name is Kim Kiyosaki. Kim, thank you so much for joining me on Follow the Money Weekly Radio.
Oh, thank you, Jerry. I'm looking forward to this.
Absolutely. Kim, I recently read your book, Rich Woman.
Thank you.
Dedicated to teaching women how to take charge of their financial lives. And in essence, the book is all about teaching women how to become financially free, which is something we talk about here all the time.
Great.
In the book, you point out how women and men are different, especially when it comes to how they view money and wealth and possessions. Take a moment and share with our audience the differences between women and men when it comes to how they view money.
Okay. Well, first of all, the how-tos of investing, how to buy and sell a stock or how to find a good real estate deal, the how-tos of investing are the same for men and women. But the biggest difference are the issues that women face when it comes to money. So I would travel around the world with my husband, Robert, and we would talk about the Rich Dad philosophy, and I'd be on stage and I would speak to women. And no matter what city I was in, it could be LA, it could be Sydney, Australia, Tokyo, London. At the end of the talk, I would be surrounded by women, and they all had, no matter where they were from, same issues, same questions. So some of the issues that set women apart is that so many of us women do not make money or make our financial lives a priority until we have what I call a wake-up call.
Until they have to, right.
Yes, till they're forced to. And so some of the statistics, Jerry, are that in the world of marriage, here in the U.S., 1 out of 2 marriages ends in divorce. And the first year after a divorce, a woman's standard of living drops an average of 45%. So her standard of living drops. When it comes to children, she's also responsible typically for the kids. So now she has to take care of herself and her kids. Today, a lot of women are facing job losses. So of the female baby boomers, 58% of female baby boomers, these are women in their 40s to 60s, have less than $10,000 set aside for retirement.
It's shocking.
So they have a job layoff, yes, or they get ill and they can't work, and next thing you know, they're broke. And another shocking one is of the elderly living in poverty, 3 out of 4 are women, yet 80% of those women living in poverty were not poor when their husbands were alive. So their husband passes away, they have no clue what to do. Mr. or Mrs. Helper comes along, and the next thing you know, they're broke. So what the statistics tell me is that so many of us women have not had the financial education. We've actually been taught to depend upon somebody else, be it our husband, a family member, or the government, to take care of us financially. And I think that's one of the biggest things is that we're still holding on to this idea that somebody else is going to take care of us. And it's an obsolete idea.
Yeah, there's a dependency of sort that occurs more so in women than in men. And it makes sense because it's cultural.
Exactly.
Kim, what I enjoy in particular about your story is that both you and your longtime husband, Robert Kiyosaki, not only have a strong passion for seeing people break free financially and educated financially, but at one time, as you write in the book, you and your husband, and many people may not know this, I didn't know this until I read your book, that you and your husband were flat broke. In the book, you tell the story of the year 1985, which you call your personal year from hell, and how at one point you and Robert were living out of the car. I don't think many people may know this until they read your book. Explain the process and the mindsets, because this is really interesting. Many people find themselves where you were back in 1985, but they certainly don't find themselves where you are now. And I think that's really the exciting part of this story. To take us through and explain, how did you move from that place of massive debt, living in the car, teetering on the edge of homelessness, to where you are today, enjoying massive amounts of wealth and income?
That's a good question, Jerry, because in 1995, Robert and I were living in Hawaii, and we sold everything we had. Robert had a company and a factory. He turned that over to his partners. I sold whatever I had, quit my job, which of course drove my parents crazy that I was quitting my job. Right. And we moved to California to build a business. And within about 2 to 3 months, we ran out of money. And that's when our year from hell began, and we were homeless for a short period of time. We did sleep in a car. We slept on people's floors. And I'll tell you, I used to have this thought that the rich were greedy and mean. I'll tell you, when we didn't have money, we were pretty greedy and mean. And the stress and the arguments, it was a really, really emotionally tough time. And my self-esteem just went lower and lower and lower. And it got to the point, and I'd say Robert and I kind of hit this at the same time, is it got to the point where, I was blaming everybody else. It was Robert's fault. It was this person's fault. It was their fault. And I finally had to wake up, and I was actually waiting for somebody to come do it for me. I was waiting for somebody to come save me. And finally the lights went on that, you know what, the only person that's going to save me is me. And I have to go out there and I have to do something. And the key was do something. I know you talk about, people can study and learn and, go to seminars and read books, but you've got to get out there and do something. So literally the first thing I did is a friend of mine had a clothing company, and I said, let me take your clothes and I'm going to put them in hair salons. I'm going to set up little mini boutiques. And I didn't know if I could do it, but I just knew I had to get out there and do something and take small steps. And there's a great quote by Einstein. It says, "Nothing happens until something moves." Right. And oftentimes, it's not until we're so uncomfortable that we finally get out there and do something.
That's so
that was
true.
The first step. That was the first step. And the second thing is, it was so easy. Robert and I, at that time of when it was so tough, we wanted to quit. We wanted to quit the relationship. We wanted to quit on our dream of building our business. Everybody said, "Oh, why don't you stop? Put your dream aside and go get a job. Just make some money." And had we done that, we never would have broken through and continued on to where we are today. So I think probably one of the most proud things I am of that time is that we didn't quit on each other and we didn't quit on our dream. And because of that, it built us. It built our character of who we are today individually and who we are as a couple. So not quitting and just getting into action and doing something really is what pulled us out of there.
You're so right. So many people maybe are working a job that they hate, or they're in a position in life where they don't want to be,
Right.
but they just don't have the initiative it takes. Just they don't realize they have to go start. You have one foot in front of the other, and that's how you get going. You also mentioned, too, how some of your friends around you were kind of discouraging you, and we're going to talk about that in a little bit, about how you kind of choose your friends now, because I think it's so vital. Many of our listeners are seasoned investors, Kim. Others are just getting started. They just stumbled on our radio program, and they're saying, hey, this is great. I want to get ahead financially. I want to create financial freedom for myself. And they realize that education is the key. And so with new investors in mind, let's go back and talk about those early days for you and Robert. On page 42 of your book, you talk about the very first real estate investment that you made. And if you will, go back to that day, explain to our audience how you got started in investing in real estate, and what are some of the emotions that you felt as you got started?
Oh, there were a lot of emotions. It was, it was back in 1989, and our business was just starting to move up and just starting to take off. And we still really had no money at the time. And Robert said to me, he goes, you need to start investing. And I had no idea what the word even meant, because all I knew of investing was something about stocks. That's, that's what they have on TV and in the papers, and that's all I knew. And he started to teach me what his rich dad taught him about investing, specifically real estate investing. And he said, okay, now go on and you're on your own, go do it. And I'm like, what? So I'm bumbling and stumbling around. I don't know what I'm doing. And we had a neighborhood attached right next door to where we lived, and it was a really cute neighborhood, small houses, really good for rentals, it seemed to be. And so long story short, I finally found this little cute 2-bedroom, 1-bath house in Portland, Oregon, which is where we were living. And at the time, it was $45,000. This is back in 1989. And I had to come up with $5,000 as a down payment, which I didn't have. And I talk about emotions. I was scared to death. I had I didn't know what I was doing. I checked this house. First of all, just putting in the offer was scary, because I had the thought that if I put in an offer and they say yes, I'm stuck. I didn't understand that, you don't have to take every offer that's accepted. But I found this little house, started doing my due diligence. I checked it up one side and down another, and I was really looking for a reason why it wasn't going to work. I really wanted to find, this is too big a problem, I can't fix it, so that I'd be off the hook. But I didn't find it. And I just kept going through, and finally, it came time to either do I step over the line or not, and I had no good reason not to do it, so I did, and I figured out how to come up with the money. And at the closing table, I was so nervous, my hand was shaking so much that they could barely read my signature.
Wow.
And so I bought the house. I'm still nervous because I had all the fear. What if I lose money? What if the tenant moves out? What if I make a mistake? All that stuff was running through my head. And so we finally closed on the deal, and the tenant didn't move out. But all said and done, when I collected the rent every month and I paid the expenses and I paid the mortgage, at the end of the month, I had a grand total of a $50 cash flow. And that's how I started.
Wow. And you got that $50 every month, and you thought, man, I have arrived.
I am on my way. And you know what? I'll tell you, that little 2-bedroom, 1-bath, that's where I learned the fundamentals of real estate investing.
All right, friends, I hope you're enjoying this interview with Kim Kiyosaki straight from our archives. If you want to go back and listen to the entire interview, or if you'd like to listen to interviews with other guests, including Robert Kiyosaki, Kim's husband, who wrote the best-selling book, Rich Dad, Poor Dad, you can go to our website at ftmdaily.com. But on the other side of this break, we'll be back with part 2 of our interview with Kim Kiyosaki on the topic of financial education and how to earn money and earn a good income with real estate. Hold tight.
We're coming back in just a moment. And remember, to find a Christian financial advisor in your area, visit www.cfanetwork.org.
Attention stock traders, FTM Daily is proud to announce our latest resources for stock traders of all experience levels. Are you ready to wade in the stock trading waters? Well, unlock Jerry Robinson's trading room and receive his daily stock trading idea, complete with buy price, stop loss price, exit target, and daily trading alerts. Become an FTM Insider and unlock the trading room instantly. But perhaps one stock idea per day is not enough for you. No problem. Get everything in Option 1 Plus. Analyze any U.S. stock or ETF for short-term and long-term buy and sell signals with our new Trigger Trade Pro system. Find FTM Insider and Trigger Trade Pro in our online store today. Visit ftmdaily.com/store or give us a call at 800-609-5530. That's ftmdaily.com/store. or call us at 800-609-5530.
Follow the money. We'll return.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Ladies and gentlemen,
Here we go.
contact us anytime through our website at ftmdaily.com. And now more Follow the Money with Jerry Robinson.
I love it.
Now, one of the questions that I wanted to ask you relates to real estate in particular, because that's something that both you and Robert, have had an affinity for, is real estate. And of course, many of the books that have been written out of the Rich Dad Company have been obviously about real estate. Do you see lots of opportunity as we go forward?
I do see a lot of opportunity if you know what you're doing. So I got into real estate because that's what Rich Dad did, and so that was my first foray to the world of investing. And I loved real. I took to it. I understood it. It made sense. It was tangible. I had control. I could change the income. I could change the expenses. I could work my debt. I loved real estate. But it's a really good question because other people out there who are in the world of investing, they may not love real estate. And one thing that I've learned, and especially talking with women, is you've really got to be true to you. And in the world of investing, there's basically 4 asset classes. There's business, there's real estate, there's paper assets such as stocks, bonds, mutual funds, and there's commodities, gold, silver, oil and gas, food, things like that. And so you've really got to do your homework and figure out which of the asset classes you're most interested in, because I think that's a key in terms of how successful you're going to be. Because if you're not interested in it, you're not going to spend a lot of time learning about it and studying it and all that is necessary to become successful. But in the world of real estate, I love real estate. It is my asset of choice. And I think today there's a lot of opportunity to pick up property at low prices, which of course gives you better cash flow. And again, we're all about buying and holding. We don't flip property. We have, but it's not typically what we do. We buy our property, we hold our property, we rent our property because every month we love that cash flow coming in. So I think today, given the market where it is, there's tremendous opportunity. I think interest rates will definitely be going up, and we're hedging ourselves for that. We're locking in rates wherever possible. We're setting up hedges for when the rates do go up, and right now you've got to be prepared for that. So one of the things we do, Jerry, is we prepare for the worst. You know, we prepare for a huge market crash. We prepare for interest rates going up. And if it happens, we're prepared. If it doesn't happen, we're still in great shape.
As I go out and I take a look, right now it's difficult to get a loan unless you just have impeccable credit and a great W-2 income. And if you're a non-traditional type of home buyer, I'm noticing that in the marketplace right now, there are a lot of people who are trying to sell their homes, and they know that people can't get loans traditionally.
Right.
So they're opting to do owner finance. They're opting to, even we're very open to subject to type of deals or whatever it might be. Do you think that's a good way for people listening to this program perhaps to get started?
I think it's a fantastic way, and I'll just tell you that the first 10 to 12 years of my real estate investing, I never used a traditional lender because our credit was so bad, and we had no money. We had no income because we owned our own business, and there wasn't any record of stable income at the time. So I always used creative financing. We did a lot of seller financing. Lease options is another way to go. We also did, and I think we're going to see more and more assumable loans where you buy the property and the loan is attached to the property. I think that's going to become more and more common because the banks don't want to hold the property either. They want to sell it, but they're going to look to people right now who have some kind of a track record, or if they don't have a track record, then look for other ways to get your financing. There's a lot of people using private lenders right now. There's a lot of ways to go, and you might even want to look for a course on creative financing for real estate and learn about the different ways that you can finance property, because people want to sell, and people are, as you said, Jerry, they're open to alternative ways of financing.
You know, Kim, I used to be a financial advisor in my former life, and I remember getting bombarded with all of the marketing literature, and one of the statistics that I saw constantly was the coming wealth transfer that was going to take place between the baby boomers and their children. But another less popular statistic that many people may not really realize, and you really deal with in your book, and I want to get back to this because we're really wanting to target women here because that's what your book is about. This statistic shows that women are increasingly becoming the chief financial players in their home, and as of 2010, 60%, and you point this out in your book as well, 60% of the nation's wealth is controlled by women. And you also point out in your book that 90% of women alive today will at some point in their lives be solely responsible for their entire financial well-being, for their own families, for their own lives. And considering all that, and considering that many women may not even realize that, what are some of the steps that women can take to get control of their financial lives?
Well, you're right. 90% of the women will be solely responsible for their financial well-being, whether it's due to divorce, death of a spouse, or choosing to remain single. And again, it goes back, number one, Jerry, is, of course, financial education. I think actually the first step is to let go of the thought that somebody else is going to do this for you. Number one, that you've got to understand that it's up to you and you've got to take charge of your financial life. Then number two is start getting financially educated, listening to programs like this, reading books, going online, going to investment meetings. We have a game called Cash Flow that teaches money and investing. We have cash flow clubs all over the U.S. where people can go and play the game for free. You've got to get out there and really start learning, because one of the keys I see, and I especially hear this from women, is that investing is risky. And in my reality, it's not so much investing that is risky, but the investor that's risky. The uneducated investor who jumps on a hot tip. I got this hot tip. I'm going to put some money into it, and the stock goes down, and they say, "Oh, investing is so risky."
Right.
Well, no, it's not the investment. It's the investor, and it's up to the investor to get educated on every investment that they make. So I'd say you got to get financially educated, but again, you don't have to dwell on it for years. Get some financial education, and then the next step, most important, is to start small. Put a little money in the game, but put your toe in the water, invest in something. And it could be as simple as a few shares of stock. It could be going out today and buying a 1-ounce silver coin. Simple things, but what it does is when you put a little money down, your interest goes up. I don't care if I have $10 down. I'm going to get interested in whatever it is I just bought.
That's right.
And so all of a sudden you start to see articles in newspapers and magazines. If you buy silver, you'll start to spot, what's happening to silver today, and your interest goes up and your education goes up. So I think part of that financial education is getting some money in the game and starting small.
Okay, well, here at our own organization, we are like you. That we're on a mission to help people take steps to become financially free. And we hear the same common objections that you may hear, and you even point these out in your book. But many people today, as you pointed out, they get stuck. They kind of get stuck in a moment, whether they're stuck, as we talked about before, in a dead-end job, or maybe just something in life is just not working, and they feel they don't have time, perhaps, to devote to this financial education that we're talking about. They feel perhaps this is probably a large majority, they feel like they're not smart enough. They feel like they're not simply smart enough to be able to do what other people can do, or to be the boss, or to be the investor or the real estate landlord. And they also feel like they don't have enough money to get started. You mentioned they could take a little bit of money and go out and buy a silver coin, but most people don't think that. They think in terms of thousands or millions, and they talk themselves out of it.
Right.
What advice would you give for people who have bought into the belief that they are not capable? And there's a lot of these people out there, like, you know this. What kind of advice do you give to these people who simply believe they're not capable of becoming financially independent as you have and your husband have?
And I hear that all the time, Jerry. I'm not smart enough. I don't have time. I don't have money. And really what they're saying is I'm too, and I don't mean this as an insult, but really what they're saying is I'm too lazy to get educated, in my opinion. They're using it as an excuse, because I don't know any woman out there who has started down this journey of taking control of her financial life who is not out there doing it and being successful at it. Sure, they're going to make mistakes. Sure, they're going to, possibly lose money at points. I've lost money in many of my deals, but you keep going and you get smarter.
Right.
And I think probably where it really starts is it's in your own mindset, and it's in your thoughts. And watching those thoughts that don't support you. A couple things. I was just listening to an interview by Lady Gaga. Okay, here she is, the number one superstar in the world, right? She says, every day I get up, I still feel like a loser. She goes, I have to tell myself I am a superstar. And here she is making millions and millions, and she's all over the world, and she still feels like a loser. I'm like, well, if she feels like a loser, I think it's very common for us to doubt ourselves constantly. And two of the things I do is I'm constantly watching my thoughts. I'm shifting the mindset. And the reason I say take small steps is because you need those small wins. If I started with a 100-unit apartment building, I probably would have lost everything because I didn't have the experience. I didn't have the knowledge. So I take small steps when I'm ever learning something new, because I need those little wins to build up my confidence. And it's all about confidence. And women out there, they're at all different levels. Some might, if you've just lost your job, your number one priority might not be to invest in real estate. Your number one priority may be to stabilize yourself financially before you take that next step. Because there's two things you can invest in. You can invest money, or you can invest time. And what I always say is if you don't have the financial education, do not invest any money yet. Invest instead in time, and time is education. And once you've got that education, then invest the money.
Perhaps some of the people listening would like to get involved in real estate, because I know we did bring that up, and that's one of your, obviously one of the ones that you really like. And I know here in the Houston area, they have a very large club called the Rich Club, which is the Real Estate Investment, Club of Houston, or whatever it is. And that's basically an association of real estate investors. Some are seasoned, others are brand new. I guess every city has something like this. You also mentioned the cash flow. If they want to find out about the cash flow game and how they can find it in their area, can they go onto your website and find that information?
Yes, if they go to richdad.com, and I think we've just put it on richwoman.com as well, there's a list of clubs that have given us their authorization to list their club up there. And it's interesting because these clubs have no affiliation to us in terms of, we're not working with them. These are clubs that just started on their own because they wanted to get financially educated. They get together on a regular basis and play the cash flow game. We didn't know this at the time. We've now discovered over 3,500 cash flow clubs around the world.
Wow.
Just sprung up spontaneously on their own because it's a fun way to learn. And it's also, and you know what else is key is that in order to take this on, and again, especially for women, there's a support structure that's absolutely necessary. You've got to have good people around you. You've got to have people that are going to support you in learning and growing. And when times get tough or when you hit a wall, you need some kind of a support structure that's going to be there so that you don't quit, because it's easy to quit.
Well, in our final remaining moments, Kim, if you could leave our audience with just one piece of advice, especially to the women out there, what would it be?
Oh, that's a good question. Well, I'll just tell you one of my big aha moments was I've been always taught to focus on income, to focus on my salary, to focus on wages, to focus on my hourly rate, and you work up to get a salary raise or increase your hourly rate, work more hours, and it was always about how to work hard for money. And I was always brought up that way, focus on income. And the shift for me, because in the rich dad, rich woman world, we talk about assets versus liabilities, and an asset is something that puts money in your pocket whether you work or not, like real estate, like stock dividends, things like that. So the shift for me came from, instead of focusing on income, I started focusing on acquiring assets. And people today, and you mentioned, Jerry, that some people listening, they're just starting out, and an asset does not need to be a complicated thing. And I'll just give you a couple of examples. Friends, in our company, we're doing our own ebooks. We're publishing our own electronic books. And so our team spent months and months and months learning how to do this. They've done it. It's successful. So one of the guys in our company put out a 20-page booklet on how to publish an ebook. Put it online. Within days, he's making money on this ebook. He's now making like $200 a month from this little 20-page ebook.
Wow.
It's an asset. The ebook is an asset. Or the women will love this one. I have a friend, she loves purses. She loves designer purses. So she goes and she buys all these designer purses, and she's renting them out to her girlfriends for events and dinners, things like that.
Now, that's interesting.
Isn't that great? I mean, she loves purses, so she's turned her liability, which is a purse, into an asset that she's now making money off of.
That's smart.
So it doesn't have to be complicated. It's just look at things in your life that it could be knowledge, it could be a physical thing that you can take and turn into an asset that would pay you money every month. And once I made the shift from focusing on acquiring income to focusing on acquiring assets, that's where my wealth really started to kick in.
Well, thank you so much for taking time to join us. I really do appreciate it.
Oh, thank you, Jerry. Thank you for educating people. Thank you for the work you're doing. Really, really appreciate it.
All right. Well, I hope you really enjoyed that interview with Kim Kiyosaki. I know that it was one of our most popular interviews that we've ever done here at FTM Daily. So hope you enjoyed that. By the way, all of our FTM Insiders and Trigger Trade Pro subscribers, make sure that you are signed up for our subscriber-only webinar that we do every single month, because it is happening tomorrow, Wednesday, July 30th, and it happens at noon Central, and we'll also be discussing real estate. So again, we're sticking with our theme for this week, real estate, and I hope you can join us for that live webinar tomorrow. Jerry, today the markets are kind of just staying flat for the day. S&P 500 is at 1975, just down slightly. Gold and silver kind of flat too. Gold at $12.98 and silver at $20.59.
Yeah, well, the markets are staying a little bit static right now as we await the decision from the Federal Reserve. Of course, that's going to be coming out tomorrow, so all eyes on the Fed. Additionally, and we've pointed this out consistently, there is some real skittishness in the markets. There's a lot of concern right now in some of the top hedge funds and mutual funds. They're looking at this market, trying to make sense of where it's heading. And you can tell that from the flows, the fund flows that we're watching. So we're going to keep all of our subscribers up to date on what that means. But in the meantime, just be careful in these markets, no doubt. We are in very uncharted territory, no doubt about it. So be cautious is the best advice that I can give you. All right, friends. Well, that brings us to the end of our program. Thank you again for choosing to allow us into your life each and every day right here on ftmdaily.com. And as always, I leave you with this final word, this time spoken by the Master himself, Jesus Christ, during his Sermon on the Mount from Matthew chapter 6, verses 3 and 4, where he said, "But when you give to the poor, do not let your left hand know what your right hand is doing, so that your giving will be in secret, and your Father who sees what is done in secret will reward you." Good words to meditate on and think upon. Remember, friends, when you want the truth about the global economy, just follow the money. We'll see you right back here again tomorrow. Until then, God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional